So, Andres, before we get into the elections, can you please set the scene for us as to what the state of the Colombian economy looks like and what the next president's economic inheritance will look like?
Yeah, absolutely, Anna. Thank you. So we've seen in Colombia really a strong economic rebound from the pandemic with a full recovery of pre-pandemic GDP levels in 2021. And that was one of the really fastest pandemic rebounds in Latin America, up there with Chile and Brazil, which also led growth last year. And growth has really been driven by a spike in consumer spending in Colombia, which has been bolstered by the government's substantial stimulus spending program, which includes cash transfers to households, as well as a series of subsidies. And we've seen this dynamic continue in 2022, with consumer spending remaining resilient in the first quarter and continuing to drive growth this year. And Colombia is also going to enjoy some important benefits from high global oil prices, which is going to bolster exports and oil revenue for the government this year, providing some upside for government spending. So these factors will continue to drive growth in 2022 above pre-pandemic growth levels, even as we encounter some disruptions and downside risks, and as other countries in the region see a more substantial slowing of growth. And you can see here our forecast for 2022 with a 4.4% growth in GDP. But one of those challenges that I want to highlight is going to be inflation, which has hit the really globally markets, and it's not going to spare Colombia. And we're forecasting inflation to continue to rise this year, averaging 8.1%, as disruptions from the war in Ukraine continue to elevate global commodity prices and already pre-existing inflation levels. It's also important to note that this rate of inflation does take into account the pretty substantial gasoline subsidies from the government, which have kept energy prices and overall inflation notably lower than they would otherwise be. Nonetheless, we're still talking about substantially elevated inflation, and that's going to be something that really dampens the consumer spending outlook as time goes on by draining the finances of Colombian households. However, we're in a fairly favorable position to withstand inflation this year. On the one end, we're seeing the labor market with a relatively strong rebound amid the broader economic recovery that we've seen in 2021. And the current employed levels, the employed population, are about 2% below pre-pandemic levels. And we're even seeing a higher rate of formal employment surpassing the pre-pandemic levels that we're seeing, that we saw before the pandemic. So favorable shifts on that side. And then we're also on top of that seeing social spending and government transfers to households that are going to continue throughout this year and act as a partial cushion against inflation. And these factors, as well as elevated household savings levels, are really going to mitigate a lot of that consumer demand destruction that we would otherwise see and keep consumer spending growth in 2022 elevated above pre-pandemic levels and continue to drive that broader growth in the Colombian economy.
Yeah, thank you, Andres, for providing that context. And it does seem that Colombia has outperformed its recovery relative to expectations previously. And a lot of it, as you just mentioned, has been as a result of social spending. So how sustainable is that spending and that growth given the state of the government's finances?
Yeah, an important question. So the social spending that we're talking about here, in particular this program, Ingreso Solidario, it's temporary in nature, and the next president is going to have to decide whether or not to continue it. But with heightened levels of inflation, a new government is really going to be unlikely to withdraw that very popular social spending program in its first months in office. But to your point, that extension is going to further weigh on the government's already troubled finances. And due to the pandemic and the expansion of social spending, we've seen the government's finances really degrade to the point where Colombia lost its investment grade last year following the failure to adopt a comprehensive tax reform. And that's going to mean increased borrowing costs for the next government and make controlling the deficit a really urgent task. We can also see that the country's deficit really remains substantially high despite the strong recovery that we're seeing in the broader economy in 2021 and coming into this year. Now, we've also seen more recently the war in Ukraine elevate oil prices, and that's really going well beyond the projections that the government had previously of $70 a barrel. We're now forecasting prices averaging in 2022 of $111 a barrel. So that's some important upside as far as the government's finances. However, those fiscal benefits are going to be limited by a few factors. On the one side, we have low levels of oil production in Colombia, which are still about 10% below those pre-pandemic levels. And there we're seeing the consequences of underinvestment in that sector during the pandemic. At the same time, we're seeing the government's efforts to offset inflation impact through really in particular, the expansion of energy subsidies. That's also really siphoning off a substantial degree of the finances or the revenue that the government would otherwise be gaining from this spike in oil revenue. So all this basically means that the next government is still going to have to deal with deteriorated public finances going forward, and that's going to require the implementation of a new tax reform. So it's going to be really important to deal with that challenge, but that's heightening a lot of the risks, because a lot of that because the form of that tax reform is obviously going to be heavily determined by the next government. So the risks around the elections in 2022, heightened by these fiscal risks that we're talking about now, are heightening the risks for investment. And we're seeing all this really dampen the investment outlook and the rebound of investment from the pandemic, which remains on a slow path, still remaining well below those pre-pandemic levels, despite those broader recovery in the economic activity and GDP. So there are clearly some notable challenges going forward as far as sustaining that growth that we've seen, though, as we'll discuss, we're also going to see some other risks weighing more heavily in 2023, where we're still seeing 2022 promoting or bringing pretty solid growth coming forward.
Hi, my name is Krista Reganey, and I'm Marketing Director here at FrontierView. I'd like to thank you for watching a segment of this webinar. If you'd like access to the full video and our latest insights, data, and research, sign up for a free trial with us today. Simply scan the QR code on the screen.